What is going on, everyone? Welcome to the Investing Bros live Saturday morning show, and we have a great discussion today. Not a whole lot of news, so it's going to be more topics of discussion, and the point of today is to discuss when will the top of the bull market actually be. We have a couple of interesting options we're going to talk about. We're going to talk about the details and the reasons why all three of these options could be plausible, and towards the end, we will give our personal opinions on when the top of the bull market will be. So don't go anywhere. Stick around, smash the like, hit subscribe. Towards the end of the show, we're going to have a whole lot of questions and answer times. Give your projects you want to have more information on, and we're going to go deep into not just the charts, but the fundamentals of projects as well. If you're excited, again, smash that like. But first, we got to roll the intro. What is going on, everybody? It is a special Saturday show. Crux is in the screen. It's not the building. We're all in different buildings. We're all in different states. But I'm excited to have him join the panel. Crux, I'm going to hold off on you, though, real quick, because I got to ask my man T-Shroom how he's doing this morning.
Tim, I'm doing better than I deserve. I really am.
Good.
And I owe it all today to caffeinated beverages, coffee.
Hey, very good. Now, do you have some water to stay hydrated? Because you know coffee dehydrates you.
Coffee? Where are you from, Long Island?
Well, I think I was saying caffeine, and then I switched it to coffee last second, so that's where you get coffee.
Virginia Tech fan from Long Island. I'm doing better than I deserve, though, Tim. How are you doing?
I am doing phenomenal. Got my morning workout in. It is Saturdays are for HIIT training. So anyone doesn't know what HIIT training, it's high intensity interval training. I don't do that slow cardio crap. It's all weights and high intensity stuff, but it was good. Burning of the legs. Finished off with the stair. I'll tell you, the stair climbers.
Ooh.
Those will get you toasted right there.
Oh, boy.
Crux, it is so good to have you back on. How are you doing, my friend?
I'm doing good, Tim. I'm much more of a fan of the elliptical machine than the stair climber. It's a little bit easier on the body, but I have not had my caffeine yet today. So I'm a little bit boggly, but, we're going to wake up with the show. I'm glad we already have 131 viewers in here. And let's have a good time. Let's talk about when the top's going to be in on crypto.
Absolutely. Let's go ahead and dive right on into it. Ultimately, let's go, T-Shroom. Do you have my tweet? If not, I can pull it up. But do you have my tweet? Okay, I put a tweet out this morning, and this is going to give us great representation. T-Shroom is just going to vote on one random one of these, so you guys see the results. But I asked the question to you guys. We have over 177 votes. Go ahead and vote more, but this is enough to give us a good depiction of where the sentiment for the average retail investor is. The question, when will the crypto bull market top out? First one was 73K was the top. So there are some bears out there who think it's nothing but downwards from here. The next one, and some people, this was probably the hottest question in the comment section. I said Q1 of 2025, right? So Q1 would be anywhere between January, February, March. It really should have been like late Q1, early Q2, 2025. The next option, this one too, should probably be late Q3, early quarter four. And then the last one, extended cycle into 2026. T-Shroom, why don't you go ahead and vote on it? Let's see how the results are looking this morning. 51% quarter four. 51% of you, 51.7 to be exact, are saying that the 4-year cycle will stay intact. If you're new and you have no idea what the 4-year cycle is, do not be afraid. We're going to explain that in the video. But the second most likely prediction right now in the sentiment in our community is quarter one. Again, we'll make it quarter one, quarter two of 2025. An early top, 31.5% of you are saying that. 9% of you are saying the top's already in. I don't know how much of that was trolls, though. I think there's probably more trolls than is legitimate votes. And then only 7.9. Oh, it just moved up to 8.7. So everything just shifted. But 8%, we'll call it, are saying extended cycle into 2026. I'm excited. So just so you guys know the flow of the show, we're going to hold on our opinions. We're going to explain a lot. We're going to go through the three of us and go step by step for the arguments amongst the top three. We're not going to address if the top's already in. Let's get that out of the way. T-Shroom, do you believe the top of the bull market is in?
I do not.
Okay. Crux, do you believe the top of the bull market is in?
I do not.
And I don't either. Put in chat if you think the top is in, but we're just going to go ahead and move into, we still have bullishness ahead of us. Let's jump into, Let's start with the very basic. Let's start with the 4-year cycle. T-Shroom, why don't you explain to everybody what the 4-year cycle is in case somebody's maybe coming in. This is their first cycle in crypto. They've only been for a couple weeks, maybe a month or two, and they've heard this term 4-year cycle. What are we referring to? What do crypto enthusiasts mean when they say the 4-year cycle should happen again?
Yeah, good question there, Tim. Well, I've got a chart pulled up here just for this exact question. Let me just make sure I've got it centered properly here. So essentially, this is what you have. You've got Bitcoin, and it halves every 4 years. Okay, so historically, whenever there's the halving, right, the halving marks a period where there's there's more scarcity, there's less Bitcoin being added into circulation, and that creates a supply shock, which then creates the price per Bitcoin going up. And that happens every time, and that's why there's a 4-year cycle. Now, what goes up must come down. So after the euphoric high and the movement to the upside for Bitcoin, there's then a sideways to downward movement that then creates a bear market. So this is an older chart. This only goes back to April of 2024. It looks like so we have had quite a bit of price action into the fourth halving, but this is essentially where the concept of the 4-year cycle comes in.
Yeah, and what's kind of interesting, kind of add on to what T-Shroom's explained there, it's been pretty consistent. That it's actually technically not 4 years. It's more like 3 years and 11 months. But it seems like we have a top every 3 years and 11 months. And that, if it plays out to continue, should put the top of the bull market in September, October area of 2025, right? So either the end of quarter 3 of 2025 or the first month of quarter 4. The ultimate, I'm going to start off. The ultimate argument for the 4-year cycle is that it has been extremely consistent. It has been extremely helpful for crypto enthusiasts over the last couple of cycles to pinpoint that top. I mean, the minute you think it's not going to happen, a lot of people thought that possibly last April and May of 2021 was going to be the market top, and it was for some altcoins. But it ended up getting a nice little 50% pullback in Bitcoin and then rallied up and almost to the day, almost perfectly set another top right on the 4-year cycle. It's something that crypto enthusiasts believe will end at some point. Someday we will no longer have this perfect 4-year cycle top. Maybe it's this cycle. But there's a good saying in the investing world that the trend is your friend until it ends. And the trend right now is that the 4-year cycle is intact. We can almost pinpoint every single bear market bottom, every single bull market top. And if that continues, that says the top of the market should be September of 2025. Crux, I'm going to go to you. Any other reasons why you think that that's still a good target to watch for every single investor when they're looking for a bull market top?
Yes, I currently do. So we know that quarter 4 in 2017, 2021, and even 2013 have all been bullish in the year preceding Bitcoin's halving event. Now, this exists because of Bitcoin every 4 year it does have. Now, that being said, if Bitcoin was not the front runner of crypto, in my opinion, this does not exist. However, where we're at here in 2024, we know that Bitcoin is leading the market. So maybe next decade, we might possibly get off this 4-year cycle. I don't think it's going to happen anytime soon. But until then, I believe that the year preceding Bitcoin's halving is the most bullish period in crypto. That's the time to most likely take profits. And the interesting part of this 4-year cycle is the length of the bear market, it actually differs. So it's actually been getting shorter and shorter. And this last bull market in 2021, going into 2022, we hit a bear market low in late 2022, which only took us a year to get there. And that's mainly because FTX, happened. And it expedited the bear market. And that's typically the time that you should be dollar cost averaging and buying your crypto. So
yeah, let's do it. Let's do that real quickly before we get to T-Shroom. Let's take a look at the charts here, T-Shroom, and look at some timelines of some things. So even what Crux is kind of talking about, let's go back to the bull market top of November 2013 and see how many weeks it took from the top to hit the bottom. Now, the question you'd have to ask here is, was the bottom back here in January of 2015, or was it over here in August of 15? It's kind of a double bottom. We'll, for the sake of the argument, go to the extended route and go to the August of 2015. That was 90 weeks from the top of the 2013 bull market down to the bottom of the bear market. It took over a year to get into the bear market bottom. Fast forwarding here, we had a top in 2017. We ended up hitting the bear market bottom. Some altcoins went lower during the March 2020 crash of COVID, but I'm not going to count that as the bear market bottom. That was a black swan event. Reality was the bottom was here in December of 2018. This one, about 53 weeks. So if we actually were to go back over here and move the bottom to January 2015 of this bear market, that one was 60. So it still is getting shorter, but that's a little bit more consistent, right? So a 7-week difference. Then you move over here and we take a look at how long did it take from the top of 2021, which was November, in this case for Bitcoin, November of 2021 down to November of 2022. This one was 54. So you're starting, or 52, excuse me. So you're starting to see it's getting slightly smaller. But in reality, that year-long process, maybe it takes a little bit longer, but traditionally in the 4-year cycle, once you get a bull market top, it takes pretty much a year to hit the bear market bottom. That seems to be pretty consistent right there. Some other details about the 4-year cycle people need to know. You guys see these green lines right here, and then this one's yellow because it's the newest one. But these green lines mark the days of the halving events. T-Shroom mentioned the halving events that happen every 4 years that cut the new supply shock of Bitcoin in half. There's also a pretty good consistency when you look at these. If you were to mark the dates from that halving cycle, let's go halving of 2020 to the bull market top of 2021, 79 weeks. If you were to go back here and you look at the halving event of 2016 to the 2017 top, how far? 74 weeks. So it's getting a little bit longer here. And then in this case, we go back to the halving event of 2012 and you go to the top of 2013. This one was 50 weeks. So in this case, it's actually two different things happening here, but it's still similar. The time periods of tops to bottoms are getting shorter, meaning the bear markets are getting less severe, but the time periods of halving event until the actual bullish top are extending. But even if we were to keep these averages up, let's just stick with 74. Here's another argument for why the quarter 3, quarter 4 should still be in charge. Let's go 74. Let's just say we're going to kind of average this out. 74 weeks right in here. Boom. September of 2025. Right? You could make an argument that this should extend and go closer into the 80s, and now we're talking about December of 2025. But for the sake of this argument right now, let's just say we stay in that 70, mid-70 range. This is part of that 4-year cycle. Crux is referencing, T-Shroom's referencing. This consistency does say a September 2025 market top should be in order. But that said, let's go off the charts. That's some consistency people should look at there. I'm going to throw it to you, T-Shroom. Anything you want to add to the points Crux and I've made for the argument that September is the right time to take profits?
Well, I don't really have anything to add other than strategy of actually taking profits, because right now we've just talked about, price theory and the mining process of the 4-year halving cycle and things like that. Will we get to a period where in this show where we'll talk about a little bit more of like how you should exit with your investments, and I'll hold off till we get to that section.
I think that's a good thing. Just so you guys know, we're going to explain the 3 scenarios. What would say that those scenarios are legitimate scenarios, and then afterwards give you our opinions, but also strategies on how to trade all 3 of the scenarios. Really quickly, a super chat from Michael Kilo, I think is how you say that name. Think gonna be major fallout in February 2025 because of rate cuts. Great buying opportunity till September of 2025, then biggest bull run of all time in 2026. That's a different scenario, Michael, but it's an interesting one. We'll have to kind of comment on that a little bit later, but it is a great transition into the next option we're taking a look at, because he's saying February, so that's quarter 1 of 2025. He thinks there will be a fallout that happens. So he's predicting an early top, a very quick bear market, and then an early bull market resurging. I don't know about that necessarily, but let's talk about the reasons why potentially we could have an early top. And by early top, we're talking about quarter 1, quarter 2 of 2025. Now, I think, T-Shroom, you're going to have a couple more pieces of evidence for this argument here in a second. I'm going to start off, go to Crux, and let you kind of back clean up here. I'm going to give one reason why I think this could happen. and some of you are not going to like it. Some of you are going to say we're going to do too political. I'm going to try to stay as unpolitical as possible, but I'm going to try to shoot straight as much as possible. If Kamala Harris wins, I still think that markets go up, right? So I've said before, I don't think it really matters who wins presidency for the short term on crypto. I think no matter what, Bitcoin and cryptocurrency is going to move to the upside. However, could certain policies continue to erode the economy, continue to make it down the hill, and we get an early recession? It's just so bad. The debt's so bad. Inflation gets out of control again, yada, yada, yada. And ultimately, you have to raise rates once again, and we get that early top in quarter one, right? So February's a little early for me. I'm more in the category of late March to April area as being the zone to watch. And I'll tell you this, even if it ends up not being the top, go back to my screen here, T-Shroom. I want to show people things really quickly. That time period on bull markets usually has some form of correction. So like April, May of 2021 was not the bull market top, but it was a major top with a 50% correction. If you were to go back over here into June of 2017, a similar time period in the 4-year cycle, it doesn't look like much of a top, right? It looks like it's just a little blip on the radar. But when you look at the price action, Bitcoin in June of 2017 would go on to have a 41% correction over the next couple of weeks before continuing its bull market. Same thing when you go over here. If you go to April of 2013, a similar time period in this 4-year cycle, Bitcoin it wouldn't be a bull market top, but it would have itself a nice 75% correction. So my point here is, whether the bull market top happens in April of 2025 or not, I am expecting some form of a significant pullback. Maybe not 50% or 70%, maybe 30%, 25, 30% pullback. Kind of similar, just in a shorter time frame than what we've just gone through right now with Bitcoin, right? We hit 73,000 there in March. We've been just dragging sideways but downwards almost 30%. I think it's going to be a lot quicker, but I would not be surprised to see another 30% correction in April. And then the question becomes, was that the actual top, or was it just another blip? Crux, I'm going to throw it to you. What are some other good reasons on your end that people should be watching out there at quarter one, quarter two for a potential bull market top?
All right, let me hit the 4-year cycles real quick, and then I'll swing back to that. Yeah. I just have one more thing I want to throw on that. T-Shroom, if you want to share my screen. So the big thing is, and we're going through this now, September is typically the most bearish month in both stocks and crypto. So seeing a Q4 next year top in September, to me, it doesn't make as much sense as possibly October or November. And that's because we see right here, November is typically the most bullish month in crypto with a 36% on average ROI. And then October, you have about a 27%. So if we're able to make it through September of next year, personally, I believe that we would push into November, which again, November in 2021 was a top, November in 2017 was a top, and also in 2013. So that's kind of just one thing I wanted to throw in there. But going into the less lengthened or the shorter cycles, right?
Yeah,
we have something called the pi cycle indicator, and this is essentially the 350-day moving average multiplied by 2, added on to the 111-day moving average. This has been the most accurate indicator in Bitcoin.
So let's stop there. And I am the king of talking way too fast and explaining things not in great detail. So this is kind of the pot calling the kettle black for me to say this. Explain that again and go a little slower so that people really understand those different indicators. Maybe they can add them onto their screens as well. Start that again. What is the pi indicator?
Okay, so the pi cycle indicator, it's right up here. It's the 350-day moving average. Okay. So the average price of crypto over that 350 days, and then that's multiplied by 2, and then you add on top of that what the price is at the 111-day moving average. So Gotcha. These are two separate indicators. This purplish line is the 350 multiplied by 2, and this turquoise looking line is a 111-day added on top of that. So basically they move separately, but whenever they cross, in 2013, as we see back when we reset this, in 2013, way back here, we've seen that it called the top whenever they crossed. It actually did it again here. So in 2017, it does it here. In 2021, it crosses here. So I can just look at the chart, move straight to it, and I can automatically see the peak from when these two moving averages cross. The interesting part about this is, again, it's been 2 days from the peak of these three different bull markets. And this right here typically happens in about Q1 of the year preceding Bitcoin's halving. Now, that being said, Bitcoin had a double top last bull cycle. The only way that we can validate this indicator to be fact is if we count May being the top. That's because that's whenever these two moving averages cross, was in our first peak. But we all know that in November we did reach a higher high, so technically it was invalidated. But this is what I will use to take profits, and I could personally, I can see that this could be the leading indicator for this bull market as well.
Interesting. Very interesting point. So right now, just to clarify, it's on trajectory is what the estimate is, that we should see that cross happen and that mark happen in quarter one, quarter two of 2025, correct?
It kind of is. Now, it has definitely cooled off. We've gone through the 6-month lull period where it's definitely started separating these two moving averages. Mm-hmm. So, sometimes stuff that seems bearish, like we just went through half a year of just down and to the right, can actually be good because it allows prices to cool off. It allows these indicators to do what they're going to do and be able to signify a top for us.
Yeah. I think that's a great argument right there. Now, T-Shroom, I'm going to throw it to you. And I know you have a couple of charts, a couple of arguments, making sure everyone understands if you're just joining. We are not saying right now that our final opinion is that we will have an early top. We're running through the three most likely scenarios and making good arguments for them. At the end, we will give our personal opinions and explain them. But T-Shroom, what have you found for evidence that there possibly could be an early top to this cycle?
So, an early top, I'd say it's not so much going to be on the charts. My contribution here, I do have a chart that would argue the contrary, that it wouldn't be an early top. But I think the biggest reason why there may be an early top is that the market has underestimated institutional interest and ability to allocate into Bitcoin, and that's not something that we can maybe throughout the rest of this week we can try to come up with some evidence to support that. But that would be, and some statistics to see kind of how that's going and the performance of institutional adoption. The biggest one that I would point to would be, flows into the ETF, the Bitcoin ETF, which we have seen a record amount in terms of ETF's history. But even a record may not be enough to get Bitcoin the liquidity and the allocation that it needs to push higher up to $85,000, $100,000, $120,000 per coin. Mm-hmm. Simply put, Tim, this is the institutional cycle. This retail doesn't have the dollars to get Bitcoin up into the $10, $12 trillion asset that would be required to get the price per coin into those levels, like $200,000 per coin. Yeah, and so institutions do have to see the appeal of Bitcoin. They do have the pockets to make Bitcoin a $10 trillion asset, right? Mm-hmm. But they have to be willing and able to allocate, right? So far we've seen definitely a willingness, right? But now, because you've seen pension funds all across the world, the Wisconsin pension fund, the Jersey City pension fund, South Korea. So the biggest funds, most conservative funds, and the Wisconsin fund is actually one of the top performing as far as pension funds go, make allocations to Bitcoin, right? And so that's positive. That means that they have the willingness, but they also have to have the ability. And right now, with the federal funds rate being at 5.5%, right, it's a little bit, it's just too tantalizing for these pension funds to just be in bonds, right? And so they're going to allocate to those fixed income instruments rather than taking risk. So when those rates do start to come down, then there'll be a bigger allocation, I think, to Bitcoin. So why would that lead to an early top? Well, if the rates don't come down, right? If we get a rate cut here in September, and then the job market just comes right back down and gets right back where the Fed wants it, and inflation comes back up, right? Remains at the levels above the Fed's target, then the Fed could just pause, just do one cut and pause and leave it at 5%, right? Which is not what I want, or it would be 5.25. is not what I want, but that could potentially lead to an early top in Bitcoin, because then there's not an incentive for allocators and big funds to take on risk. They're just going to stay in the risk off assets like bonds. So that would be kind of the thesis there, is that the big pockets that are required to get Bitcoin into these mega cap tech, the mega market cap that would be required, that 10 trillion number, just don't have the willing. They've shown that they have the beginning of the willingness, but they may not have the ability. So now on the contrary, I have the 10-year Treasury constant maturity minus 2-year Treasury constant maturity from the St. Louis Fed.org website, but we can get to that, because that would be an argument for the contrary, a healing of the inverted yield curve.
Well, let's do this. We're going to transition here. I'm going to wrap up, make one more argument for why, and this is actually more of an argument against the 4-year cycle continuing and why we could see an early or late top. And we're transitioning now from saying what the possibilities are of an early top, quarter 1, quarter 2 of 2025, or extending into 2026. And this is it. Let's go back to my screen here. Now, we just laid out, this is going to sound like I'm going back on what I said, but we just laid out the 4-year cycle and the consistency of having to tops, of tops to bottoms, and how it's just been very on schedule. But let's think about this, right? So before the halving event of 2012, this was just all exploratory price action, right? So don't read too much into what happened before 2012. The first time we see a 4-year cycle pattern happen, it's like, okay, cool. Oh, look at that. It took this long for these things to happen. Then we saw a repeat of it in 2016. Oh, wow. We did things the exact same way. That's pretty cool. And then the third time, that's when you develop the pattern, right? The first time is just the initial response. The second time could just be a coincidence. The third time is a pattern, right? Now, all of a sudden that you have a pattern, people begin to expect certain results. Here's the problem, though. History rhymes, but it does not repeat. What I mean by that is you see similarities in how charts move all the time, but rarely, if there's a pattern that has played out consistently, rarely does it play out the exact same way. And my point here is that the first 4-year cycle, again, no one thought anything of it. The second one, oh, cool, we saw a coincidence. The third time we have a pattern. Now everyone is betting so heavily that we will see a repeat of that 4-year cycle. Even on the poll we put out this morning on my X account, the highest predictor is everyone thinks that 4-year cycle plays out once again. The problem with that, though, is that this is an institutional market. Institutions, as T-Shroom said, are going to have the most control. But if all of retail, if the majority of retail, rather, let's just not say all, let's say majority of retail is convinced that the top will be in September, or as Crux said, maybe November of 2025, that Q3, Q4 area, the likelihood of it happening is actually pretty rare. It's pretty small, because that's what institutions do. We've said this scenario before. They are the big bad bullies on the playground that shake the kids out. They shake the lunch money out of the kids' pockets. The retail investors, we're the little kids with the money in our pockets. Institutions are the big bad bullies. If we're convinced the top is going to be September to November and we go take profit, that is just playing right into the realm of the institutions to either A, give us an early market top to where we are holding, but all of a sudden we miss the top in early 2025. Or number 2, the bull market's higher and we're convinced that's the top. So we sell, they buy up all of our supply, and they continue to go up. That's going to be my biggest argument for why we could see either an early top or a late top, because ultimately it's retail that thinks that the 4-year cycle is going to continue. And in the history of how institutions work, the minute you think you have a system in place that works, they change the game. In this case, this is the first year that people are overly confident that the 4-year cycle will continue, and therefore it's the year that I think it will be debunked. Now, I kind of gave you a little bit of just into my opinions of what's going to happen, but let's keep going on with this other concept. One of the reasons why I think a 4-year cycle extended version will happen, I already have kind of talked about a little bit with that argument I just made, but let's also talk about the waves of institutional adoption in general, right? So between 2009 and let's go 2012, 2013, there's a phase that says at first they ignore you. nobody really knew what Bitcoin was. Was the government aware of it? I'm absolutely sure they were. Were institutions aware of its existence? Probably, but nobody was talking about it. No one cared. It was this weird thing that just hijackers, computer nerds were doing in the background, right? But then price really started to take off in that 2013 bull market, right? And all of a sudden you enter into the phase, well, at first they ignore you, but then they laugh at you, okay? So the laughing phase, I remember vividly between the years like 2013 into like 2018, 2019, I remember seeing TV shows make punchlines about how a character was putting all of his wealth into Bitcoin. It became this running meme that all these nerds are making a lot of money, but they're still just computer nerds. Bitcoin's a scam, but you know what? Maybe move all your money into Bitcoin because, it's the future. In fact, during this time period, around 2015, 2016, somewhere in that range, is where I first ever heard about Bitcoin. And the person I heard from was a weed farmer trying to convince me that Bitcoin was what Revelation talks about as the end of the world's currency, right? But as much as I would have loved to buy back then when price was sitting below $1,000, my reasoning, I think, was still pretty good. I got a guy who grows weed for a living telling me that this is what Revelation is predicting, and I'm a believer in the Bible, but it was just a little much to say I'm going to go put my life savings into this coin that people make jokes about, right? But that was the phase. That was the first they laugh at you. But then things started to switch as we got into the bull market of 2020 and 2021. And it became very evident that the institutions entered phase 3. And that was the phase 1, first they ignore you. Phase 2, then they laugh at you. Phase 3, then they fight you. The amount of reports coming out that Bitcoin specifically was a threat to the world's environment, that it was chaos, it would never make it, it was a conspiracy theory left and right about who actually created it and what its real use case would be and how it would ruin the planet. I firmly believe that the 2021 bull market was suppressed. It absolutely should have made it over $100,000 based off of retail investors alone. But when you get institutions shorting it and causing selling pressure, that stifles any momentum the retail investors can make on their own. And even though retail could have made it to $100,000, all of that negative volume, negative pressure kept the price low. But guess where we are now? We have entered into phase 4. Then they join you. They ignore you. They laugh at you. They fight you. And then they join you. I think that this is a good argument as to why institutions want to buy as much of this in cheap prices as possible. And you and I, retail investors, might be sitting here saying $100,000 Bitcoin is not cheap. $200,000 Bitcoin is not cheap. If we get to $200,000, I'm taking profit. I'm buying cars. I'm buying houses. I'm investing in vacation. If you know the future, though, if you see the future and the trajectory, the way these institutions read it, to them, $60,000 is dirt cheap. $100,000 is dirt cheap. $200,000, maybe it's a painful at the moment, but it is a beautiful entry because they're not thinking about Bitcoin being $10,000 or $60,000 or $100,000. They are thinking about the times it will be $1 million, $2 million, $13 million. And to get a massive supply, and there's only so much, guys. There's only 21 million Bitcoin to get. A lot of it's already probably unavailable. There's 61 million millionaires in the world. Not even all of them can have one. I believe that they will use the retail investors' convictions about the 4-year cycle to manipulate them into selling all of their supply to the institutions who see the future better than retail investors. They'll convince you it's the actual top again, and then we extend ourselves into 2026. There's actually, I don't have the numbers in front of me, but if you spend a lot of time with stock bros, I'll call them stock enthusiasts, there's a cycle in the stock market that I can't remember the exact number of years, but it all kind of boils down to the stock market really probably shouldn't top out in 2025. The stock market probably will top out in late 2026, early 2027. And the 4-year cycle of crypto has been conveniently similar to the stock market. But let's just be very honest. The big reason why 2021 crashed both crypto and the stock market was because we entered into a recession. Whether the government wants to admit it or not, we had two consecutive quarters of negative GDP. We had a massive inflation problem. We had to start raising interest rates dramatically. When the stock market does poorly, crypto is going to do poorly as well. But I think we're entering into a phase with all of this institutional adoption coming in that we will see a level of the stock market and crypto moving similarly. And if the stock market does not crash in fall of 2025, if it holds on into 2026, into 2027, I think that crypto will do so as well. But it's going to be the crypto retail investors who get duped, convinced the 4-year cycle is still intact. They'll sell way too early. And then by the time they gain the courage to buy back in, because Bitcoin's sitting at 300, 400,000, but looks like it's getting stronger and stronger, that's going to be when the next recession hits. That's going to be when the markets crash. And then institutions will sell their bags back to you at a very high price and let you take the bag on that and lose the money.
Yep, absolutely. It reminds me of this fact, which isn't the factoid of the day. It's just a fact. The original price of Manhattan was 60 guilders, which is roughly equivalent to $24 at the time, which in today's number is about $1,500. This figure comes from a letter written in 1626 by this person, a member of the Dutch West Indian Company, to the Dutch States General. So why do I bring this up? Because what the banks are doing right now, and you can say the banks, but the elites of the world, those who understand how financial markets work, they really have an intimate relationship with supply and demand dynamics in global trade. They understand that Bitcoin could be similar to this deal, where they're able to buy all of Manhattan real estate for $24, right? They're looking at Bitcoin. They're looking at Bitcoin saying $60,000 a coin, right? That seems like a lot, but is that actually more like buying Manhattan for $24 again? And so they have they play such a long game that they have too much to lose by not getting some skin in the game, especially when you look at the current regime of monetary leadership, which is the Federal Reserve, which is just running up bills to tens of trillions of dollars. Now it's like $36 trillion, and it's $1 trillion a month to service the interest on that. Now that number will come down as interest rates come down, but the banks all around the world, they're buying Bitcoin, they're buying gold because they're looking at what the current system is, the TradFi system, traditional finance system is, and it's not looking good, right? They could potentially turn it around. It's not a 0% chance that you can't come back from it, but they're like, hey, we have way too much to lose by not having some kind of insurance policy, and Bitcoin and gold are seen as some alternatives for the future of trade and commerce and wealth preservation, most importantly. So, if you don't have any Bitcoin, it's very unlikely you don't if you're listening to the sound of my voice right now, but if you don't have any Bitcoin, right, this is the main argument for why institutions are buying it, because when institutions buy, these are the same guys that they look at the internal combustion engine, right, being invented in the Industrial Revolution, and they're like, okay, this might be a complete flop. People may want to be like, no, I just want to keep riding a horse. I don't want to ride in a car. Cars are dumb. It's going to explode, right? But the institutional investors are thinking, yes, but if this works, we can't afford to be left out of this innovation and this just revolution in transportation. So they have to invest, right? And 1 times out of 100, or more than that, probably 5 times out of 100, they make an investment in a revolutionary idea or concept, and it does flop. It doesn't get adopted. But Bitcoin, being around since 2009, I think the banks and Wall Street and major investors around the world are starting to say, look, the conclusion we're coming to is that we can't afford to be left behind if this really does take off. And if the Fed, if the ECB, if the Bank of Japan can't figure out how to rebalance their financial situation, or at least get people to buy their bonds, then we better have Bitcoin on our balance sheet in that case. So
yeah, I think that's all very good stuff. Before we give our answers on what we actually think is going to happen, and how we're going to, and to your point, T-shirt, you said earlier, the strategy of how we're going to play this. Crux, anything you want to add to the argument of an extended cycle? Yeah.
So I got something quick. Somebody in Discord earlier asked in the crypto channel. Well, they're basically saying that they wish they had more dry powder to DCA. See, yeah. The longer that you're in crypto, you have to understand these things have been every 4 years. You got these cycles, and you need to think one cycle ahead. So what can I do to create money take profits and then invest in the next bear market. So don't think of it as like you're too late right now. Don't think of it as you're too early. You're just on time. So continue to learn about crypto. Whenever you do have dry powder, it is a good sector to diversify into. Don't throw all your eggs in one basket, but this sector has been proven to provide very good returns. So,
yeah. Well, with that said, it's 11:40. Like always with these Saturday shows, it took a little longer to get through that section than I thought, but I think there's a lot of great information. If you're just joining when this is over, go back and watch from the beginning. It's going to be very good. Smash the like button if you guys are enjoying this conversation so far. It's a different feel, but it's Saturday. We always have a different feel for our Saturday shows. Let's go around. I'm going to start with you, T-Shroom. We laid out scenarios and arguments for all three options. The 4-year cycle stays intact, and we get a top September to November of 2025. The early top suggestion of quarter 1, quarter 2 of 2025, and then the extended cycle into 2026, early 2027 top. What do you got to rank in your mind, the probability likelihood of all three of those? And which one's the greatest, which one's the least?
So here's what I'm going to do. I'm going to say that the most likely is the Q4 2025, because that's what a lot of these indicators are predicting, the 4-year cycle, being the chief among them in terms of the importance that I give. So that would be number one, right? And that's when I would start to sell, and we'll get to that strategy more intimately here in just a second. I think then the more likely than a Q1 top, I think would be the extended cycle. And why do I say that? I say that because I'm banking on the fact that institutions move slow, right? We're in 2024. 2024 was the first year that pension funds even got any a dollar's worth of exposure of Bitcoin at all, right? They move slow, and they should, because they're responsible for, the retirement funds of teachers and cops and state workers that usually don't know much about finance, so they need a caretaker. Or at least that's the system that we have today, right? So these big lumbering, slow to adopt funds, they're going to continue to be slow, and I think that they also kind of wait for they wait for others to have success, and then they'll have success, right? So I think everything in terms of the institution is going to be different than the retail cycles that we've seen in the past, which are very quick, right? I think with the institutional cycles, it's going to be extended into 2026 and beyond. So I'm still going to keep my emotions and keep my expectation is that I'm going to start to exit altcoins specifically in Q4, in the beginning of Q4, maybe even towards the tail end of Q3 2025, right? But in my mind, I'm going to say, but there's a good chance that this keeps going, right? And so that's going to motivate me to hold on to probably more Bitcoin. And again, we'll get into more of the strategy, but that's my thought.
So in a nutshell, your number one prediction, you think it's most likely to see the quarter 4 repeat the 4-year cycle. Number 2 is the extended, and then number 3 is the early. Yep. So you're very you got to hear first, guys. T-Shroom is extremely bullish still. With everything happening. Crux, I'm interested in you kind of ranking your opinions of the most likely outcome of those 3 scenarios.
Yeah, I got to go with the bros on this one. I think Q4 of next year is going to be the peak. I did talk earlier about October and November being the 2 most bullish months. So as long as we can get through September, November is my month of choice. The second option would be Q1 of next year. And again, that's because the Pi cycle indicator. That being said, that's whenever I'll be taking a lot of my profits and then putting into certain cryptocurrencies that traditionally do better in bear markets. What do I mean by this? T-Shirt, you mind sharing my screen?
I do not mind at all.
Alrighty. So you have something called Tron. Tron, not many people speak about this, but this chart looks a lot different than Bitcoin, but in certain ways that you can take advantage of this. So it does peak typically whenever Bitcoin peaks. However, whenever we go through this bear market, it goes down 66%, which was actually less than what Bitcoin went down. And if you have a play like Cardano or, some of these other cryptos, they go down at least 90%, in some cases, 99%, 95% like Algo. So you got these good projects that did very well in the bull market, but did not perform well in the bear market. Yeah. So another case of this would be Binance Coin. And Binance Coin also, Let me see if I can pull it up. BNB. So Binance Coin also dropped around 65% or so in the bear market. So we see that, not many influencers out there in the Western, not a lot of Western influencers talk about Asian or Eastern style cryptos. So you got like Justin Sun over there in China. You have BNB with CZ and Binance. These play a lot differently than, most of the cryptos we talk about as content creators. So just something to take into consideration. If you're going to take profits, but you still want upside potential, BNB, Tron, Bitcoin, Ethereum, these things are much better to hold through a bear market. But in case we do go to Q4 2025, you'll still get that upside potential. Now, my third would be, so this right here is the stock to flow. Oh. Yeah, so my third would be the extended cycle. Yeah. So 2021 happened very, it was an eye opener for me because Plan B, he was able to call September and October to the dollar amount at least a month prior. So he would say by the end of September, this is the price of Bitcoin. By the end of October, this is the price of Bitcoin. And he just nailed it. Everybody was buying into this lengthening period. The stock to flow is essentially a model that takes your demand and your supply crunch. So how difficult it is to get a hold of Bitcoin as it's coming out, right? So this was showing $100,000 by the end of November, I believe. And everybody subscribed to this theory. Everybody was big on the lengthening cycles theory. And it did not play out. And I'd probably say this was the number one indicator, along with, I'm not going to say the influencer's name, but a lot of people were following a specific influencer that was saying that there is lengthening cycles. Until this happens, I'm a firm believer that Q4 of the year preceding Bitcoin's halving is my peak. And then last in place would be, we've already topped, and I do not believe that we've topped yet.
Yeah, so we got a little bit of a difference there. So refresher, T-Shroom thinks most likely scenario, Q4 2025. Second most likely scenario, an extended cycle. And then the third most likely scenario, a short cycle. Crux is similar, but a little bit different. He says most likely he agrees at the top. It's going to be a 4-year cycle repeat again in November. But his second most likely outcome is an early top, and then he follows it with the extended. So it's my turn, and I'm just going to throw a whole wrench in the system. And I feel like it's not going to be hard for people to understand where I'm coming from based off the arguments that I made. But your guys' most likely scenario is my least likely scenario. Let's just start from number 3. I think the least likely scenario of the 3 at the moment, and I'm not saying it's 0% chance. I think that in reality, everyone likes to say the 4-year cycle was a continued system. It wasn't, right? I explained it earlier. The first time it just happened. The second time was a coincidence. 2021, the third time, that's when it became a pattern. When you see it happen 3 times. But now that everyone's convinced it's a pattern, now that just like you two are in the camp of saying, I think it's going to happen. I've said it before. I'll say it again. I'm not 100% right about these things all the time. But my best predictions I've ever made have been contrarian predictions, meaning I'm going against the grain of where everybody else is thinking it's going. Why? Because a lot of time retail investors' opinions end up getting confusing and not happening. And with heavy prediction, not just you two, because you guys make some fantastic arguments as to why this will happen. But to me, the overall sentiment that should be the top is the reason why I don't think it will be. I think that institutions are in full control of crypto right now. Like it or not, don't trade based off of your emotions. Don't trade off of what you want crypto to be. You got to trade off of what you have right in front of you. And what we have in front of us is a manipulated market. But that manipulation is going to mess with you. And if you're convinced A will happen, they're going to do B. And if you're convinced B will happen, they're going to do A. In this case, with such heavy conviction that there's supposed to be a 4-year cycle again, I'm just not high on it. So what does that mean? My second option is, instead of giving my first, obviously you're going to get it by default. The second most likely scenario is the short cycle. Again, I think the biggest thing that's going to lead into that is potentially who wins president of the United States here in a couple of months. I think how does our economy respond? We're about to enter into major cuts. In fact, right now, we're predicting not just 75 basis point cuts by the end of December. They're actually predicting a whole percentage down, which means whether it happens in September or November or December, under the current trajectory, one of those cuts is going to be 50 basis points. And I don't think that's a very good thing necessarily. I think that's responding out of fear. I think there's you can deal with the political side of this however you want. I'm just dealing with the data and how people are responding. I think that there's a thought that if Donald Trump wins, that the economy is going to be okay and that we can go much further. But I think there's a thought that if Kamala wins, it doesn't mean they're not going to have a short-term boom. We're going to do things to make the economy look good as she goes into her presidency. But then you got to pay the piper at some point. She's gonna put policies in place that make people say, "I'm out. I don't want to be a part of this." Right? And guess what? That scenario is that quarter one, quarter three. That's within her first 100 days in office. I think if she becomes president and we see some policies she pushes, I think it's going to discourage people from a longevity of a good economy. We'll rally into it. We'll hear her policies. It'll crash. Now, that was my second most likely outcome. I believe the most likely outcome here is an extended bull market. And the reason why, again, it's because the institutions are controlling. But the institutions aren't unemotional. I guess is the best way. But they're not emotional like retail investors, but they're convicted. Institutions are convicted about the future of Bitcoin. We see an all-out arms race at the moment between government entities on who's going to control Bitcoin. This become a major, even though they haven't discussed it in any debate, it's become a major topic for both of the American presidential candidates. We're watching countries like Russia and China thaw on their bearishness and their restrictions on Bitcoin because they see the future. They see what cryptocurrency and Bitcoin specifically can be. And so therefore, it's not an issue of just we have control, let's manipulate it just to mess with retail. It's how do we manipulate it so that we can gain more supply so that we keep control. And in this case, there's so many retail investors that are staunch holders. There's people, even though he's technically an institutional investor, there's people like Michael Saylor and MicroStrategy who just bought another $1 billion worth of Bitcoin, which is good as gone. He is not going to sell that Bitcoin anytime soon, meaning the floor for how low Bitcoin price can get just keeps rising and rising and rising and rising. And so the only direction they can manipulate price to go is to the upside and make money. And that being said, that's why I think they will use every excuse in the world to convince you to sell yours. They're going to convince you here in quarter one, quarter two, that something bad is happening. The price will even retrace a little bit, but it won't be the end of the bull market. And you're going to sell if you're an emotional investor, and they're going to buy the dip. And then again in quarter four, it's going to be the roaring, all the I told you so. Oh, look at this. 4-year cycle is playing out again, just like always before. All right, everybody, it's time. Take your profits. And they'll say, all right, thank you. We'll buy that dip up too. We'll let it dip 20%, 30%, but we'll buy your dip and we're going to keep on running. But now all of a sudden, retail just lost a lot of Bitcoin, a lot of crypto. And I'm not talking about meme coins. I'm not talking about obscure little coins. I'm talking about the big dogs, Bitcoin, Ethereum, Chainlink, AVAX, the ones that are actually going to impact the planet and how we operate. They are going to use this as an excuse to manipulate you to sell so that they can buy those lows. Now, don't get me wrong, guys. I have plans with my money. I want to invest in different things. I want to diversify. I want to buy a house. I'm not saying that I'm not planning on taking any profits next year. But I'm absolutely leaving a good amount on the table to make a run into 2026, 2027, because I'm convinced that the concept of what people think the least likely outcome is going to be, more often than not, somehow ends up being the right one. And in the poll I did this morning, the way you guys voted was the most likely outcome is the 4-year cycle. The second most likely is the short cycle. The third most likely is the top's already in. And the least likely of the 4 is that we extend. That's exactly how institutions want you to think. They want you to take profit because they see the future. They know it's an arms race. They know the supply is so limited, it is going to be very hard to get your hands on Bitcoin. And you guys already own a lot of it. Retail still owns a lot of Bitcoin. How do they get you to give it up? They convince you to repeat history. They convince you to sell it the 4-year cycle. You sell it. They give you a little bit of a dip. You're convinced it's going lower. They buy the dip. Before you know it, you sold at 200,000, and the next year, Bitcoin's sitting at 500,000, and you missed out. I urge people, this is where we're getting to the strategy portion. This is what I'm going to do. I'm going to start with how I'm going to handle this. I want to hear how you two want to handle this. All 3 of these options, I do believe, are local tops. All 3 of these options, I do believe, are going to be coming with sell signals and buy signals. What I mean by that is I think we rally into quarter one, quarter two of 2025, and there is a correction of like 20, 30%. So to sell a little bit right there, especially your hype coins, especially if you're invested in memes right now, I heavily would get out of those. Even the coins that maybe don't have the established fundamentals but have a fantastic community and have a great run-up, it's probably time to take some good profit on those levels. Probably even a little bit of Bitcoin and Ethereum as well, but not a lot. And the ultimate thought would be to take profit to create more dry powder on a 20, 30% dip, and then I'm going all back in, right? Then I ride this out into quarter four. And once again, in quarter four of 2025, whether it's between September being the specific 4-year cycle element or whether it gets into November, as Crux is saying, historically those months like to pump, I believe there's going to be another local top, another 20, 30% correction in Bitcoin. Some altcoins probably correct 50, 60%. But in the same way, this isn't the end. It's a great opportunity to take some profit, create some more dry powder. Hey, if you need to you need to finance something, if you want to diversify, maybe that's a good time to get some profit out of crypto and go into something else. But don't go out of crypto and then think that you're a rich king and you're going to wait for a year for another massive buying opportunity, because I'm not convinced that that's coming. I'm going to take some profit, wait for that 20, 30% dip, and I'm going to go right back in and I'm going to buy some more. I am not taking 100% profit. I am not going to be going all out on these tops. I'm going to take a portion simply to create some extra dry powder, but then I'm going to buy the dips. And then I'm going to wait into 2026, into 2027, when we start to see the recession bells ring. And I do believe if you stay keenly operating on what's happening in the economy, if you remove emotions and you look at data for data points and you understand how these things work, I bet you there's going to be a time where everyone feels so amazing. The economy's booming. Everyone's convinced it's awesome. That's when I'm going to sell. When everyone seems to be at their highest, when emotions feel like America cannot be stopped, that's when I'll sell. Because rarely do recessions happen when you're already anticipating them happen. They always come when everyone's excited and doing well. That's the time to maybe take some massive profit, regroup, because why? That's what institutions are going to do. That is my philosophy. That's my strategy of how I'm handling the next couple of years in crypto. I'm not saying I'm going to be perfect. I'm not saying that that's 100%. I'm going to continue to monitor the markets day in and day out on this show, in the Discord. I reserve the right to change my opinions in the future because that's what a good investor does. But as of today, my convictions tell me I think an extended cycle is the most likely scenario for Bitcoin.
I like that. Crux, do you want to go next? You want to hear what T Shroom's got cooking? Oh, you're muted, which is a clear sign that you're ready for me to go next.
Yeah, go ahead, T Shroom. I'll go right after you.
All right. So I'm pretty much in a similar boat to Tim. We've identified a couple of different indicators that help us identify when euphoria is in the market, right? And euphoria, there will be. I do still think that there'll be a retail kind of blow off top style topping in this market, but I'm not trying to time the top, right? What is that indicator? First, let me just Coinbase. When Coinbase is in the top 10 apps downloaded on the Apple App Store, Coinbase, that is an indicator that euphoria is in. Everybody and their grandma is getting in there trying to buy Bitcoin at $100,000 per coin, right? And they shouldn't be, but they are, because they think they're gonna. It's like the lottery ticket. They know nothing about Bitcoin. They know nothing about Ethereum. However, they think that they're gonna get rich, like their nephew just did, and so they're going to try to follow suit. And everybody's going to be downloading Coinbase in order to do that. When Coinbase gets into the top 15, top 10, right, that's what I'm starting to think that we're the euphoric phase is in, right? Now, could there be an extended rally? Yeah, there still could be, different dynamics. This time's different. You get the yield curve healing. You've got, the Fed rate cuts, could get back all the way to zero, could even go negative. Like, there's all kinds of different things that could happen, right? But based on history, I will be starting to take percentages out of the market of altcoins and my Bitcoin stocks. I am at this point only willing to part with 25% of the Bitcoin that I actually hold, the spot Bitcoin in a cold wallet, right? Mm-hmm. That's not something I'm really interested in selling all of, right? And I don't even know that I'll sell all 25% of what I have. But the altcoins, they're gone. Might hold on to a little bit of Caspa just to dunk on Retro Mike a little bit, but but more than likely, all of my altcoins are going to be sold at 10 to 15% increments, starting in the last week of Q3 on through the Q1 of 2026. So that's kind of my strategy. And I'm the strategy is reliant on holding as much Bitcoin as I can. Mm-hmm. You're welcome, Retro Mike, and dumping pretty much all of the altcoins and Bitcoin mining stocks. That includes CleanSpark, MicroStrategy. I have a couple of different of the leveraged ETFs of Bitcoin, BitX, and also Coinbase. Right. Mm-hmm. So these are all. I've done my buy low, sell high strategy, and I'm going to be rewarding myself for that. You might be hearing this and being like, T-Shroom, how could you do this? What about HODL? You got to HODL, be on Team HODL. Team HODL is good during the bear market, right? But I have to take profit, or else, I am not a great investor, right? I'm just part of a tribe, part of a team. So I'm a little bit of both. I'm part of the tribe, part of the team Bitcoin. I think Bitcoin's here to change the world for the better, right? But at the same time, these altcoins and Bitcoin stocks are where I'm going to pay myself, right? They're where I'm going to get paid. And so I've talked about risk management strategy by not selling everything on one day, kind of parsing it out, 10 to 15% sells.
We call that, so people are familiar with DCA, dollar cost averaging in, meaning you have a strategy you buy every Friday or every paycheck. Well, DCA out, dollar cost averaging out, is what T-Shroom was talking about. You create the top is close or it's already in, so I'm going to every Friday or every 2 weeks or every day sell a certain amount and take profit to move back in a dollar. That's what he's kind of talking about there. DCA in, DCA out.
Absolutely. And then I talked a little bit about kind of the ideology of why it's okay to sell, right? We're not here to be a part of a team and a group. It's part of why we're here, but that's not the only reason, right? We're still part of these markets. So that's the way that I see it. And hopefully you all learn something from there. If you have some questions or if you think I'm wrong, let me know here in the chat or jump into the Discord. We have a free Discord. You guys can access that down in the link below where it says Discord. You sign up, jump in. Actually, while we're at this, before we hear from Crux, we had a question. Michael Killow said, T-Shroom, I've just joined Pro Bros level. How do I get that hat? Crux, there's a channel where they can go and put their mailing address, correct? Where there's a Google form.
Right. As a Pro Bros member, you get access to a channel called the Founders Chat. And that's where, us Pro Bros with myself, you, and Tim, we have access to that. And every now and then we'll drop a form about once every 2 weeks or so. And then you just fill out that form, which includes your address and a couple other details on how we can get you that hat. And that's you'll see, just keep an eye out for that form in the coming days.
Look at that hat.
Yeah. Make sure fill it out. I just made yesterday, T-Shirt. I actually just made, speaking of hats, another 20. But that's it. I'm out of my supply, so
that's right.
We're going fast. We're gonna have to reorder some stock up on some more hats. People are getting them in bulk.
These hats are handmade by Tim, and by made I mean assembled
with love. Right. There's this nice little hat press machine a friend of mine has, and I just go over there and I press the hats and put them on there.
They're hand assembled by Tim.
Yeah. Well, I told you guys earlier. Shout out to Retro Mike Tech, who just gifted 5 people, and we're waiting for him to come in, so I'll read those names here in a second. But thank you, Retro Mike Tech. I said we're going to do some Q&A. We've had such a great conversation. We're not going to have questions, answers, but guess what? As we're on the topic of this Discord, we love being here live with you guys 5 days a week, normally on Saturdays as well. But the conversation never stops in the Discord. So if you guys have questions, thoughts, concerns, you want to make your point and help other people, because this is a community. Well, I don't see myself as this foremost expert that you only should listen to me and never take anyone else's insights. I think there's things you guys know that I don't know. I'm simply the leader of a community that we're helping each other change our lives for the better with generational wealth. So thank you to Retro Mike Tech for gifting those memberships as well. But go over the Discord and join today. BJ, Norwegian Noob, Bit, Beard, Crypto, Revox. Is that it? Yeah, so those are that's 4. There should be one more. One's out there to
Kenneth
claim.
Smith. Did you get Kenneth Smith?
Kenneth Smith. Oh, it was just hidden right there where I kept your eye. Kenneth Smith as well. Shout out to you guys. Make sure to connect to the Discord. You get to be part of our Wednesday streams. Crux, give us your strategy on how you're handling these markets with your crypto investment.
All right. As I said earlier, I'm always thinking one cycle ahead. So, the past 6 months has been bearish. We all know that. The way that I'm looking at this is setting in the floor of the next bear market. So us, if we do peak out in 2024 or 2025 rather, a year after that or so, we should hit that floor of that bear market. So I'm thinking it as something bullish. Now, that being said, the price to mine Bitcoin on average right now is about $44,000. It has 4 years to change before we'll get that next halving. But at that point, it'll be $88,000. So the real race, no matter what happens, how long it takes us for to end this cycle, or if we continue, is we have to be $88,000 in the current metrics in how expensive Bitcoin is. And this is by the year 2028. If Bitcoin is not $88,000 by the year of 2028, then miners will most likely be mining at a loss. Now, this has happened. The last bull market, Bitcoin was about $22,000 to mine on average, and we went down to $16K. So it has been proven that these miners are willing to mine at a loss. However, you don't want to keep these miners, you don't want to keep your foot on these miners' throats. We should not have to be relying on them. We're hoping that the price continues to go up over time. And, if it's a lengthening cycle, it's actually better. The longer that we're in a bull market, the better it is typically. So I'm hoping that, Tim, you're correct on this, that we do go into a lengthening cycle. But to also talk about what T-Shroom talked about in euphoria in particular. So this year has been good. It's been a year of understanding what the trends are. We know AI played out. We know that gaming did not play out. We know that oracles are doing well. L2's meh. But we're starting to see the trends and what actually happens, right? Next year is whenever you should be rewarded for paying attention to what happened. And this year should be about reallocating your funds. I'm actually a believer of selling at a loss if you're going to swap it into something that has better potential, and also understanding the tax incentives of doing so. I'm not going to get too lengthy on that one, but So last thing. So in regards to Bitcoin stocks, T-Shroom, he mentioned that earlier. I see these as a front runner of what happens to actual Bitcoin. So when you look at like what MicroStrategy does, what Marathon, what CleanSpark, all these other, stocks have been doing, they've been front running Bitcoin. So by the time, Bitcoin hit its cycle high at 4.5x, the miners already hit, 9, 10, 15x from their bear market low. So, I'm a firm believer of, depending on what the stock ticker is, always do your research that there are good plays outside of just holding crypto. If your parents or, older people or just people that are uninformed come and talk to you about crypto, it's not a bad idea to tell them about ETFs. Because if you tell them to go buy Bitcoin and send it off your wallet and this person's 80 years old, most likely they don't understand what a seed phrase is. They don't understand all this stuff, but it allows them to get exposure to what crypto is.
Yeah, I think that's a great even point. As we wrap up today, went a little long. There's two big things that I want to kind of close off and tie a little bow tie on this whole stream that I think are very important. The first thing, as you heard throughout the show, first of all, you should know T-Shroom, Crux, and I are all very good friends, love each other, respect each other, but we all have different opinions. Why is that so awesome? Because when you surround yourself with people who only agree with you, you never get stretched. You never get challenged. It's the diversity of opinion that allows people to get better and stronger and greater at everything they want to accomplish in life. So my first point to you guys, continue to challenge and push yourself. Surround yourself with people who disagree with you and see if you can learn a thing or two. The second thing that I want to make sure we stress here is we've talked about a lot of different ways to invest and make money, but I want to make sure we have the end goal in mind correctly. The end goal in mind for investing should not be attached to one specific coin or currency or thing. It should be attached to what is the way that I create value and sustain my value. What I mean by that is a lot of people think about trading and investing and how much money can I make? And if I'm thinking money, I'm probably thinking dollars, especially if I'm an American. How much American dollars can I have? That's a terrible way to think about your future wealth. Why? Because the value of the dollar is terrible. It's going to the downside. It is going to leave you high and dry. I guarantee you that. Just looking at how economies work, it's going to leave you high and dry. The reason why I think Bitcoin is so important is Bitcoin going to make you the most money between now and next year or 2026, more so than some of these altcoins? No, it shouldn't. But if you look at, since its existence, what is the best value for your work that the world has seen since 2009, it's hard to argue that Bitcoin isn't the right one. So when we're investing in trading altcoins, I'm not investing in trading altcoins to gain more US dollars. I'm not investing in trading altcoins to gain more Ethereum or Chainlink or Cardano or AVAX or Ondo or whatever it is. The end goal should be value. And until something presents itself as a longer term, much better store of value than Bitcoin, the scenario has to be, how do I invest in trade cryptocurrency to gain more what we call Satoshis, the breakdowns of what Bitcoin is? Because right now, nothing in this world rivals the long-term value proposition of Bitcoin. I love altcoins. I love crypto. I love finding ways to make money. But ultimately, you got to shift your brain from dollars to Bitcoin. And if in the future that changes to something else, we'll adjust. But for now, the greatest value is Bitcoin. Walk away with that. Surround yourself with people who disagree with you and find a way to stack sats at all times. Love you guys. See you Monday, same time. Well, not same time, 3 p.m. in our morning show, but we'll see you in the same place. Love you guys. Have a great weekend. Adios.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots, stack bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor, the TA. Shout it out loud on the PA. T-Shrooms news, got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividends. Trying to make paper, turn that better to cake. Money like Lego, connect the dots, stack bank. We are investing bros. We are investing bros.
Investing bros. Investing bros. Investing bros. Investing bros. Investing bros.